So let's push ahead for the discussion on Korean and international finance, and I'd like to introduce our moderator, who is Mr. Ricky Kim, Senior Associate of Stephenson Harwood LLP. Ricky, over to you. Thank you.
Thank you very much, Kevin, for the introduction, and thank you firstly to Marine Money for your efforts in making the annual Marine Money Korea a possibility in spite of the ongoing COVID-19 pandemic, and also to my panelists for taking time today to partake in today's panel discussion. Korea remains a very important market for Stephenson Harwood, and I'm very pleased to have the opportunity to lead another panel in this year's virtual conference with very familiar faces. I note that this sentiment has been shared in the previous virtual Marine Money sessions that shipping business is one that is very personal. And this is, of course, very much the case here in Korea and alongside Korean culture. So though it would have been great to catch up with friends and colleagues at the Paradise Hotel in Busan, I'm grateful for the opportunity to greet everyone virtually. Just my pleasure to introduce my distinguished panel speakers, Mr. Ben Kim from Hanwha Investments and Securities, Mr. Jung Woo-sung from KTV Asset Management, Mr. Klaus Schmidberger from KfW based in Singapore, Mr. Junhyung from Kyangko. I don't think you can see his video, but he's dialed in, I believe. Mr. Kane Chung from ING based in Singapore. So as mentioned by Kevin, the topic for discussion today is twofold. The first topic being that Korean ship finance sources are still important for international owners building ships at Korean shipyards. The second topic for discussion will be international ship finance is still essential for Korean shipping companies seeking global reach. I certainly hope that over the course of the next half hour or so, we'll be able to have an informative panel discussion on the various finance options and trends from Korean institutions and traditional shipping banks. So going straight into the first discussion topic, we of course cannot avoid any discussion today without mentioning COVID-19, and indeed, while we have known for some time that the Korean shipbuilding industry has long been experiencing difficulties dating back since the financial crisis more than a decade ago now. So the Korean shipbuilders have been experiencing even further difficulties over the course of this year as shipbuilding orders plunged globally amid the COVID-19 pandemic. Based on data from shipbrokers, it has been reported that in terms of new build orders, the first half of 2020, there was only half of what it was achieved back in 2019. However, fortunately, it's not all doom and gloom. News articles as recent as last week reported very positive signs of recovery this third quarter of 2020 for the Korean shipyards. In particular, there has been numerous articles on Korean shipyards receiving high-profile orders, especially in the LNG and ultra-large crude oil carrier sectors. The data produced last week show that based on VLCC orders on a global scale this year to date, the Korean shipyards take almost 50% market share. Amid of this backdrop, I would like to invite Mr. Junhyung, Mr. Jung Woo-sung, and Mr. Ben Kim to provide their perspective as a Korean finance source on the first topic. Of course, this would be on top of Kexim's presentation that we just watched. Mr. John, if you're on the line, may I please invite you to first share your perspective on this? I'm not sure Mr. John is online, so perhaps I could start with Mr. Jung Woo-sung. Sorry, I think you're on mute.
Let me start again. Hello everyone. This is Woo-sung Jung from KTV Asset Management. From KTV, I'm in charge of global infrastructure. Before we touch upon that first topic, let me introduce KTV and then the recent activity, and then based on such activity, what we are contemplating to support international maritime owner and then business players. So KTB, we have 20 years very strong presence in Korean capital market, and then we basically covering traditional investment sector like stock, derivatives, and bond, but also alternative investment area last 20 years. In my case, I joined the KTB Asset Management 4 years ago. Then we set up the global alternative investment group, and basically my coverage is non-real estate, real estate like maritime, aviation, infrastructure, and energy. So far, we are focusing on have been focusing on not only some maritime vessel, but also maritime infrastructure areas. So one of our big achievements from KTB is we are basically trying to provide alternative finance source to the international owner as well as a sponsor, as well as some business partner for alternative investment source from the based on Korean capital market source. So regarding the first topic, actually, as you know, we have various financing sources here. One of the most important financing sources Korean sovereign financial institution like KEXIM, KDB, and K-Share. Basically, ECA financing is one of the main pillars for, I believe, available financing source to Korea. And based on the ECA financing scheme, international commercial bank as well as Korean local bank or Korean capital market players, they try to combine a competitive financing solution to the international ship owner. That was, I believe, that is still main financing source to the Korean international ship owner. So today, I think I would like to suggest one of some, another color and another angle to the international sponsor and as well as some ship owners. As mentioned, in my case, when I work in the KTB, I think the last 10 years, there are some down cycle in the global maritime industry, and then we are now seeing some recovery in the market. However, in case of Korean ship finance market, the private financing source is really tough business environment because there are many alternative investment some sector like domestic real estate, global real estate, global infrastructure, and previously until last year, aviation is one of the new investment areas. So I think there is not. It was quite tough to attract domestic institutional investors' interest for the maritime sector. So I would like to shift some change their appetite and then encourage their appetite. I suggest kind of co-investment scheme together with the Korean some sovereign institution. That one of our main program is Ocean Value Fund program together with the Korean development banks. So in 2017, based on Ocean Value Fund program sponsored by the KTB, and KTB we participated and then supporting a global shuttle tanker transaction built in the Korean shipyard. We provide very competitive alternative financing source to the junior piece. So I think that is still valid, and then one of the most competitive and effective way to support international ship owner. For the time being, honestly, still there is some COVID-19 issue in Korean capital market, and it will impact that kind of restriction and some appetite restriction will last further until next year. However, I strongly believe, and we have seen very strong demand and interest from the Korean institutional investor for global alternative investment area like maritime sector. So I'm emphasize that some kind of co-investment scheme with Korean sovereign financial institution, that is most effective way Korean capital market financing source. Second one is, I think these days after COVID-19, as you know, there is a very huge demand and then interest for the investment in the logistic asset, like a logistic center and like a key logistic infrastructure asset. So in case of international ship owner and international sponsor, if they need some alternative financing source or would like to find some another diversify their financing source, I think it is a very good time to check with discuss with the Korean finance some players, and then we can provide kind of some the alternative investment source to the international ship owner and as well as a sponsor. Recently, we are very successfully closed some global container terminal transaction together with some Korean liner company as well as KOBC. So that we have seen, we recognize huge demand from the Korean capital market to participate in such a global logistic and transportation infrastructure areas. So today main topic is ship finance. However, if we extend our area like a maritime finance and maritime infrastructure area, I would like to say to the global audience that there is a very strong appetite from the Korean capital market to invest global maritime infrastructure asset going forward. So I think today's ban and here and we basically focusing on the develop such a business opportunity and investment opportunity, and then we can provide very competitive competitive financing source.
Okay, thank you very much, Mr. Jung. I think that's been very useful. Over to you, Mr. Bankin. Perhaps you could give a short introduction to your institution first and provide your thoughts on the first topic.
All right. Thank you, Ricky and Marimoni. Hello, everyone. My name is Ben Kim, Director of Infrastructure Finance Center of Hanwha Investment and Securities. Let me briefly introduce myself and my company, then move on the topic. I have been working in shipping industry for more than 15 years, previously working in shipping company and asset management company. So after joining Hanwha, I'm taking care of transportation sector, such as shipping and aviation, etc. I'm very excited to participate in this session today. Thank you for having me. We Hanwha Investment and Securities is positioning as a mid-sized investment banking house in Korean capital market. Our investment banking division have done 23,000 TEU container box ships with $200 million investment and a number of 30 million to 100 million investment per each project with domestic ship owners last year and this year too. Meanwhile, our the infrastructure finance center has invested in Europe and the US based infrastructure assets like airport, LNG terminal, midstream pipeline, solar power, etc. So each project has an investment above $100 million. Furthermore, if we co-work with our group subsidiaries, Korea's second largest non-banking financial solution provider, Hanwha Life Insurance and Hanwha General Insurance. Together with them, we can do a more sizable project to international owners. So we definitely say yes, we are the right channel to international owners who are building ships at Korean yard. We are close with international banks, Korean institutional investors, and shipyard, even KOBC. We trust we could offer customized finance package to global ship owners. So speaking of the topic from Lecky, ship finance market in Korea, maybe globally, I believe the current market situation is quite polarized. Either super credit owners by bank financing or non-investment grade small owners by high yield equity or mezzanine financing. It feels like only a few medium ship owners left, no medium risk profile, no medium level of margin structure can be expected from ship finance. That's because shorter charter period makes difficult position to ship owners, plus low charter income is also one of the chronic matter to arrange optimal financing solution to ship owners. So therefore, here is my suggestion, bringing Korean institutional investors to global ship owners. I propose long-term full amortization financed by fixed cash flow generated from charter income. This shall be similar with other type of infrastructure project. Our capital nature, together with our backdoor investors, is infrastructure money that we have done 30 years profile based on availability payment, which is technically saying similar with unpayable charter. So if the charter is fixed, the maturity and profile would not be matter for us. So nowadays, investors tend to weigh on cash flow, neither type of asset nor loan to value. Yes, LTV was one of the major guidelines when we look at the project in first glance. But if cash flow is well stable, 90% or 100% LTV can be considered in general understanding. And sweet spot for maturity is usually 5 to 7 years in typical Korean financing. But like I say earlier, if we got proper charter, long-term charter, then we can provide long-term maturity and profile. In final, the margin level for easy understanding to ship owner is fixed around 4% for senior loan financing, fixed around 7% for junior or mezzanine financing. Of course, this guideline is based on long-term full amortization structure. So once again, our money nature is pretty much similar with infrastructure capital, that we are definitely flexible on the investment period. So I understand what I mentioned is not feasible to every ship owners, especially in current charter environment. But this is something we can propose to potential owners who try to get long-term investment and long-term financing from Korean capital market. Thank you.
Hey, Mr. Ben Kim. Not sure whether Jun is able to speak, but I'll just move on to the second topic and hopefully we'll make this into more of a discussion. But so moving on to the second topic, I recall this being a point of discussion last year as well. And as we are all very well aware, many traditional international banks have been big players in ship finance, and in particular Korean ship finance, have either exited Korea and Asia as a whole, or from the shipping industry entirely, or otherwise greatly reduced their portfolio. But in spite of this, as a legal counsel, we've seen that Korean ship owners remain very active in seeking financing, and of course seeking refinancing of their existing loans. And obviously ING has been one of the major banks that remain very supportive of Korean ship owners. So Mr. Chung, can I perhaps invite you to first touch upon your thoughts on the second issue, and perhaps when you speak about this issue at hand, you could address points such as whether ING is taking certain kind of projects, or there are certain kind of clients that you're targeting, or given the funding gap, is this an opportunity for ING to expand its portfolio, thereby possibly helping new clients who are looking for financing, or is the strategy for growth more limited? Mr. Kane, please.
Sure, thanks, Ricky. Hi, everyone. My name is Kane Jung, a director in ING Transportation and Logistics APAC, where I focus on shipping and container box financing clients in Asia. ING is a long-term player in the shipping market with 30 dedicated professionals in Amsterdam, Frankfurt, London, and Singapore. Our lending portfolio currently stands at around 10 billion US, financing 1,100 vessels globally. And Korea is one of the important market country for us, and we have a long-standing relationship with many of our shipping clients and companies in Korea. So coming back to the Ricker's questions, and actually it is no doubt that Korean shipping companies need international finance, I think mainly for two reasons. First, the owners need to diversify and expand their funding base. No banks can provide unlimited funding to a company due to concentration risk. So relying on a small number of the banks could create a risk if one of the banks is not able to provide funding. We have seen cases for the past few years recently, especially for several European banks have put out their business in shipping. And in addition, the bank's funding cost changes over time. So sometimes Korean banks certainly can provide competitive pricing to the clients, but at the same time, an international banks also can provide competitive pricing due to strategic reasons or regulation reasons or any others. So if owners have a relationship with both local and international banks, and actually they can likely have a better options in choosing the best price deals. And second reason that I want to point it out is that actually if they have a relationship with the international banks, and it is also a good source of information on the market. Generally, international banks have extensive network with international ship operators, tonnage providers, and charterers. So given the shipping is truly global business, it is definitely helpful for the Korean owners to understand what is going on in the international market. For example, I know that some of the large corporate or large shipping company in Korea are having a relationship with international charterers likes of Vale, Shell, BP, Vito, and so on. Those charterers are already existing client of international banks, not only in shipping, but also in corporate sides. Therefore, international banks can have more insight on the companies. So if one of the Korean owners or clients wanted to have a new relationship with the charterers, with international charterers, then actually the international bank can share their view and can provide information on the charterer. And lastly, maybe it's a minor reason or minor impact, but if the company wants to increase their visibility in the global market, then there is a PR impact, because having a relationship with international banks means that the company complies with the international standard for shipping finance. So it is certainly helpful. And yeah, if I move on to second points regarding financial options or trends, I would like to say that in general, still, the secured term loan is a mainstream of the financial options. However, the terms and conditions are getting tighter. So banks still prefer to see a short tenor, a steep profile, which is mainly driven by the regulatory restrictions, which will be tightened, I think, if Basel IV comes in effect in 2023. In light of these regulation changes, we also see that the banks are trying to change their banking model from traditional buy and hold to buy and distribution in order to maximize their capital allocations. And in terms of assets and clients, we as an ING looking for, actually ING approach has always been focused on corporate risk instead of having different appetite as per the asset class. So we can finance all type of vessels, being containers, dry bulk, tankers, LNG, LPG, and so on, and can look at spot trading as well, spot trading vessels as well, as long as we are comfortable with the corporate and the management. This means that we are not an asset player, It also means that actually we do not provide the funding or financing, even though LTV is very low or it is covered by the ECA cover, if we don't have trust in the company and management. And lastly, if I may, one more thing on the asset type, I can see the increasing inquiries nowadays for LNG financing, which is different from the past LNG financing structure, which was project finance type backed by the long-term contract. But however, if I look at the latest cases, it is hard to see a real long-term contract. Instead, the contract period has shortened to 5 to 7 years. This means that financiers or banks have to take a view on a balloon risk after 5 to 7 years, which in my view is huge risk unless amortization is very steep, given the new building price for the LNG is 180 to 200 million. I appreciate that there is a spot market for LNG, but that is not as active as the conventional ships. So we as an ING can take a certain level of balloon risk if the corporate is strong, but it's hard to take the pure balloon risk based on a market outlook. So this mismatch could create concern for ship owners who plan to order the new LNG ships.
Yes, thank you, Mr. Kane Chung, for your input. Mr. Klaus Schmidberger, I'm aware, KfW remains very interested in Korea, and as Kane mentioned, Korean ship owners are securing very good long-term contracts. Is this something that KfW could look at? There's given the financing funding gap.
Thank you very much, Ricky. Can you hear me? Is that sound okay? Okay. Yes, Ricky, thank you very much. Yes, this is definitely an interesting field of business for us, the Korean owners with long-term employment with international charterers. But maybe give you first a quick introduction to KfW and KfW-IPEX Bank especially, because we might not be that present for all our audience. So just a quick wrap up. KfW-IPEX Bank is the commercial part of the KfW Group, which is the promotional, international and national promotional bank of Germany, owned by the government. So we are the commercial part owned by the KfW Group, owned by the government of Germany. KfW Group is about 6,000 to 7,000 people working. KfW-IPEX Bank is about 750. So roughly 10% are working in the national part, and we are set up in different sectors. I'm part of the maritime industries, and we are covering the industry globally out of our Frankfurt head office, but also from the local offices around the globe. There are 8 of those, and I'm sitting here in Singapore covering the APAC region together with my colleagues here. KfW Group, as given by the government background, enjoys a very good rating of AAA. We are owned by those, but still have our own rating with a AA that provides us with a very competitive, conditions for refinancing, which we are happy to put at work for our clients when necessary, especially when it goes long-term and high leverages. So what we do in the maritime industries is more. Our main focus is on new building for European owners and international owners, and I think we are quite successful. When you look at the Marine Money league table recently, we are number 4 with a total portfolio of $16.7 billion, which is mainly driven by our core sector, which is cruise, built in European yards, especially in German yards. These huge assets require a lot of financing. We structure, underwrite, and distribute this into the market. So currently, of course, cruises maybe not the sector people would want to be in with the COVID pandemic situation, but we are positive and optimistic that this will be overcome, and the operators in this sector are extremely strong and have lots of resources and access to capital and liquidity. Further, besides cruise, we do a lot of containers, tankers, ferries, everything that's pretty much that floats we can do. We're not so much into the more volatile sectors like bulk, or offshore. There we focus more on the production side, like FPSO or FSRUs. Like then we are closer to maybe Ben Kim with infrastructure kind of structures. Yeah, then in Asia, our current portfolio for the Asia Pacific region is about 1.1 billion, mostly in Singapore, China, but also we are currently working on our first deal for a Korean client. I think I can share more next time we we meet on a panel or in person, hopefully. And this is and yeah, we are currently covering this out of Singapore. We're gonna grow our presence here in Singapore to cover Asia Pacific more intensively, because we think this is where the region where there's the most dynamic and the more, especially for the maritime industries.
Yeah, Klaus, just one question. I think I know that you've mentioned on very many sessions that KfW, being the background of KfW, you need a sort of European aspect to the deal. So I was wondering, but you did mention that you will consider on a case-by-case basis on whether to embark on a deal. And looking at the Korean deals, I speak on behalf of the Korean ship owners. Even if there is no European element, should they still reach out to you?
Definitely, because as you said, we require this European element. That's absolutely right. This has not changed, but we are quite successful and creative in finding these elements, because there are actually several avenues we can go down and find and look for this. Like there are, of course, European owner, European export, that's a given. I think I don't have to explain, but then for Korean owners, especially, I think we can establish this European link via the charterer. That's, I think, the most common and most successful way to go. If there's a charterer, large oil company, trader that provides a charter contract, then there's a European link. Or especially that's for the LNG and the higher spec, more expensive assets. There's we normally find a lot of European content and equipment on these vessels. So we can establish the link then via the export of equipment to the yard and then indirectly to the owner. So that's one of the dimensions we do need to follow when we look at our business. So besides, of course, credit quality and pricing, there's the European link we have to fulfill, and then more coming up now recently is also the ESG and the green element. Yeah. So this will also support, any green element will support, I think, a deal internally.
Sure, thank you. I'll maybe touch upon possibilities for collaboration between the international banks and the Korean finance sources. Perhaps Mr. Ben Kim and Jung could touch upon whether there are any room for opportunities for international banks who work with the Korean funding sources. Perhaps I could ask Mr. Ben Kim first.
It's some difficult question because I have experience with some overseas just the project with just long-term contract like 25 years. And at the time, I tried to find just the foreign international just bankers to consider that project. But just like I say, what we pursue, just our company, our just nature of the money is the long-term investment, like 20 years or 30 years, based on the some PPP contract or just available payment. But just in this ship financing sector, the bankers, their point of view for the long-term investment, like 20 years or 25 years, just profile, cannot achievable from them. So that there was some challenge for this profile issue. But obviously, I'm pretty much just agree with just Mr. Kane Chung's idea that some sector is very attractive, but the nowadays like LNG sector, the charter period is getting shorter, and then the asset just valuation is not very stable. So I suggest my way like long-term investment together with long-term financing from international banks. That's something I'm now thinking of.
So in addition to the bank's comment, let me share my experience with based on Ocean Value Fund, which I did a few years ago. There was a long-term charter based on the existing confirmed cash flow. We can provide a very competitive junior piece. So I'm still believe that, and then as long as I sense from the market that long-term financing solution is most effective way and competitive solution from the Korean capital market together with the international banks. But in combination with the international banks, I think if we pursue on the senior piece, we may find a very rare business chance. So I think potential collaboration, most ideal case is international bank. They developed a good transaction based on their existing and worldwide network with good the sponsor and ship owners. Then Korean capital market may provide some competitive junior piece or mezzanine piece. In case of LNG shipping, I'm totally agree with Kane because reason why the investors, especially institutional investors, were interested in the LNG shipping was that there is confirmed cash flow based on the long-term off-taker contract and charter contract. However, nowadays LNG shipping is getting changed to the more spot basis, and then it is more commercialized, so not easy to find such a long-term project. So anyway, international the shipping finance market, some ship owner as well as the international shipping bank, they are looking for kind of some very brave money who can take some asset risk during their some shorter charter period, because senior lenders, they are basically pushing on some kind of amortization profile, and junior lender is not in the positions argue and then ask such things. So if there is some mechanism or some structure, ship owner may share their interest together with a junior piece or mezzanine piece investor. I think there is some possibility or the demand for Korean capital market and investor to share the risk as well as some, the gain. That is, I believe, some solution from the Korean capital market at this moment.
Okay, thanks for your input. I've just received a message that Mr. Junhyung can't join in due to technical issues. So perhaps if either Klaus or Kane had anything to add.
Yeah. Klaus, if you want to proceed.
Well, maybe more general remark, and when it comes to trends but it's shipping is a global industry, and of course, so I think it applies to Korean and to other national owners or international owners. I mean that we see a lot of the trend of further consolidation, I think, in all industries. I think it's driven by, or especially when it comes to senior lending from Western or international shipping banks, that they are more and more looking for this, for the tier 1 owners, which is, I think, a function of several developments at the moment. I mean, it's the it's a consolidation in the market. Like the banks are looking for good credit ratings, which are normally come along with the size of the company. The bigger the fleet, the more resilient normally the ratings, the companies, the better the access to the tier 1 charterers, and so it's kind of self-enforcing. And then on the other hand is the ESG topics, which I mentioned earlier, is that you have to be able to afford and to finance new technology, finance several technologies to diversify the risk. You cannot maybe bet on one horse when it comes to fuel, and when it comes, we've seen, I think, a bit of this like in last year in the scrubber discussions and the IMO 2020 discussions. I think to the large owners, they could afford to invest in different kinds of technologies to fulfill IMO 2020. If you bet on one horse, the risk definitely is higher. So I think going forward, this ESG topic will drive this consolidation or increase the speed of this consolidation in different sectors, and that's why the banks, I think, will even more focus on these names. Doesn't say that smaller owners won't have the chance to get access financing from international banks and senior secured debt, but I think the niche players, they always have with a successful established business model, will always have the accessibility. But as Jung said at the beginning, it's the middle is kind of drying out. The medium size, the medium they cannot specify their business model from the others. I think this will become tough for them. Yeah.
Thank you, Klaus. Anything to add, Mr. Kim?
Sure. I mean, if I made one more thing in terms of the sweet spot between the international banks and Korean banks, certainly I think that there is a sweet spot, because if I look at it, the advantage of the Korean investors or capital market is that they have a very good deep pockets. It means actually liquidity is sufficient. And in terms of pricing, they can provide a competitive pricing compared to European investor or any other investors. So as long as they can find the proper investment vehicles, then they can put their money in. But the problem is Korean investors are not familiar with the European owners, and they're not familiar with traditional shipping financing. I mean, they always look at the long-term contract behind. But if that's the case, then container ship financing should be carved out, because generally, if you finance the container liners, there's no long-term contract behind. So that's where international banks should play a role, because international banks can educate the Korean investors so that they can harmonize between the Korean investors and then owners in Europe. So that's and like Woo-sung mentioned, that if the owners in Europe wanted to leverage up their financing up to, for example, 90%, then international banks can provide a 70% advance financing, and on top of that, the Korean investor can top up 20%. Then that's a good solution for the owners, and overall it will be a good solution package to the owners as well. But in order to do so, then both Korean investors and international banks can play a role.
Okay, thank you. Thank you, everyone. And before I just head back the mic to Kevin to address any questions that there may be, I think I'll just summarize very shortly that Korean ship finance remains very much active and hungry. So over to you, Kevin.
Thank you, Ricky, and thank you for everybody on the session so far. I think it is true that, I mean, Korean finance from the Korean institutions is a little bit kind of tailor-made to Korean deals or kind of industrial shipping type deals. One of the questions which came in refers to Chinese leasing. Chinese leasing has been a very large competitor both of the international banks and of the Korean ECAs. And I just wanted to get a sort of an impression, perhaps from maybe from Klaus, maybe from Ben. I don't know. Is our Chinese leasing companies still competitors of the business that you're trying to do, Klaus?
I think they're both competitors and partners. Of course, sometimes the owner decides and opts to go with a Chinese lease, and and we don't get the deal, but then other times we can establish financing for the Chinese lease company, then and on the board as a financing in the second row, which then of course provides us a second layer of security. So our direct borrower is then a Chinese lease, and then just the indirect borrower is then the shipping company actually operating the vessel. So it's both. Yeah.
Okay. And Ben, I mean, the deals you're doing are long-term charters, A-list charterers. It's the kind of deals the Chinese leasing companies like as well. Do you see them as competitors, perhaps?
They can be both, I guess. Just the last year, I just co-worked with some of Chinese leasing company. At the time, I raised 5 to 10% equity from the Korean capital market, and then I just co-work with them for the 90 and 95% from just whole package, full amortization structure from Chinese leasing company. At the time, we co-work together. But on the other hand, if we participate in some bidding process, they are maybe our just competitor. We also provide long-term investment, but they can do. So just only the competitiveness from just Korean capital market is we are much transparent, and then we are flexible in terms of just the type of contract, type of asset. So that's who we are, I guess.
Okay, Ben, thank you. Another question came in. We're starting to see this as, I suppose, more in the international finance market, sustainability-linked loans, both in shipping and in other industries, where margins can float depending on pre-agreed ESG KPIs. Kane, perhaps I can ask you about that. If one of your owners, do you have facilities in place or structures in place where owners can benefit from beneficial pricing or terms if they meet certain ESG requirements?
Yes, sure. The sustainable finance, we all familiar with the broader concept of the finance, sustainable finance. Yes, and in terms of the sustainable finance, there are different products, but sustainable linked loan is one of the products which the owners can put certain conditions, and if the condition is met, then like you mentioned, the pricing can be reduced. So one of the the condition is the carbon emissions on the entire fleet. So if the owners or the borrowers is able to reduce the carbon emission compared to previous year by X%, the X% can be agreed between the financiers and owners. Then we can provide a more reduced pricing to the owners. But on the other hand, if they do not meet the conditions, then pricing can go up as well. So that's something the borrower should be bear in mind.
Mm-hmm. And are ship owners who are approaching you, they're interested in this structure, they're willing to sort of entertain it?
Of course, we as a bank, it's love to provide the sustainable linked loan or any kind of form of the sustainable finance products. And I have to say, ING is the leading banks in that area.
Mm-hmm. And Ricky, you're dealing with many banks and seeing many structures. Are you also seeing a lot of ESG activation in loan agreements and in structures?
Not as yet, but we've been getting a lot of inquiries, and we've been speaking to a lot of banks on this. I don't think there's any set rules or provisions that we can include. So it's a process that's beginning, and hopefully maybe in the next 5 years we'll be able to speak about this in broader detail.
Perfect. Okay. We're almost out of time, so I'm going to ask just one last question, and if I can ask you each just very quickly, just 1 minute to respond. Will shipbuilding and Korean shipping confidence bounce back in 2021? Woo-sung Jung, what do you think? Will we see a much better year in 21? You have to unmute yourself again. You're on mute. Woo-sung, you have to put your microphone on. Okay.
Yeah.
So
Okay.
2020.
The 2021, I believe we can have we can see the better market business situation, because I think the investor and then global economy, they realize that transportation and logistics, especially shipping, is quite important, critical for the global logistic chain. So I believe there is a getting increase of appetite.
Okay, great. Kane, what do you think?
Yeah, of course, the 2020-2021, I hope it'll be better than 2020. But in terms of supply of the vessels, I hope it will not be dramatic supplies in the market, and it deteriorate in the market. It's not good for everyone. But certainly 2020 outlook, it's better than 2020.
Yeah, Ben?
I feel positive about upcoming shipping market next year. We see the supply and the order book decrease time to time. The fuel price is expected to maintain the current level. And IMO environmental regulation may boost up more scrap against old and unqualified ships. So even though just global trade may not be growing for next or 2 years' time, but the supply would be limited very much. So as a consequences, I expect we could see some good opportunity next year.
Perfect. And Klaus?
Yeah, I pretty much share the view of my my co-panelist here. I'm also positive about next year. I think it's hard to imagine it to be worse than 2020. And besides the low order books we've seen currently, I think also green technology will provide opportunities for the Korean shipyards, because they have they provide top quality. They have a lot of experience in high spec vessel building, and I think this can be applied to green technology, to wind offshore, maybe going forward, and all this the markets that have maybe that are still growing going forward. Yeah.
Excellent. Thank you very much. So that's the end of session 2. I'd like to thank Ricky, Klaus, Ben, Kane, Woo-sung, and Junhyung, who is listening in, but for technical reasons couldn't actually join us, for a great discussion. This session and the first session will be recorded and will be put onto our website within the next 1 or 2 days. We will be sending a link to all of the people listening in so that you can listen to it again or anything that you missed. We're very much hoping that 2021 will be a much better year, and that we will be able to attend in Busan in 21 and host our conference and meet you all face to face. So thank you very much for taking part. Thank you all very much for listening in. And this is Kevin Oates from Marine Money signing out. Thank you. Goodbye.
Thank you very much.
Bye.
Thank you very much, everybody.